Today we'll be discussing the economic implications of the new dynamics in Russia and Ukraine in light of the recent attempted coup in Moscow. The Russian war of aggression and the attempted coup in Moscow have reminded us of just how fragile peace and security truly are. But it's not just the political ramifications that we need to pay attention to. The economic consequences are equally significant. In the aftermath of the pandemic and the war in Ukraine, the global economy finds itself in a dangerous state. To make matters worse, the inflation shock that followed has heightened the challenges. Both Russia and Ukraine are still struggling to rebuild their economies while grappling with soaring inflation rates. Thanks to the imposed sanctions, direct supply chains with Russia and Ukraine have been severed. This disruption has had a profound impact on various sectors, leading to significant price hikes for raw materials, energy, intermediate products, and transportation services. For instance, fuel prices have skyrocketed, doubling in some cases. Meanwhile, the cost of gas has tripled, amplifying the financial strain on businesses and households alike. These price surges ripple through the global market, affecting consumers and industries worldwide. In the midst of this economic turmoil, Russia finds itself on the edge of another potential crisis. The recent march of disaffected Russian mercenaries towards Moscow that sent shockwaves through the country and the world. A quick backstory behind the audacious mutiny. On June 23rd, Yevgeny Prigozhin, the enigmatic leader of the Wagner mercenary group, made an astonishing declaration. He openly expressed his intention to take down Russia's military leadership, to the nation's astonishment and that of the international community. Just a day later, videos surfaced revealing a stunning scene outside Russia's southern military district headquarters in Rostov-on-Don. With little resistance, the Wagner fighters seized control of the headquarters and advanced towards the heart of Russia, the capital of Moscow itself. Negotiations were initiated with Belarusian President Alexander Lukashenko, and eventually the Wagner forces turned around, abandoning their march on Moscow a little under 24 hours before they'd begun. Prigozhin, the mastermind behind the mutiny, would eventually make a surprising declaration. He claimed he had no intention of undermining the Russian regime, leaving many puzzled about his true motives and the nature of this elaborate power play. While predicting the ultimate outcome of this revolt remains uncertain, the economic consequences have already begun to take shape. In the short term, we can anticipate a series of significant shifts that will impact both Russia and the international community. Reports have it that the coup attempt originated from a vital export hub for grain and oil. This highlights the potential disruption to key industries, which could have far-reaching implications for both domestic and international markets. The immediate impact can already be felt by ordinary Russians. With the ruble banned from global currency exchanges, Russians are now forced to pay more than double the rate to acquire dollars from local currency shops compared to just recently. Local reports indicate that the exchange rate for the dollar has more than doubled in just a day, reaching as high as 200 rubles compared to the previous day's rate of around 85 rubles. This sudden currency devaluation adds further strain to the financial well-being of the country. The ripple effects extend beyond currency fluctuations, however. As President Putin's grip on power appears to loosen, flights out of Russia have witnessed a dramatic surge in prices. This rise in flight costs signifies the growing uncertainty within the country and the potential implications for international travel and business operations. Geopolitical experts are sounding the alarm, warning that the loss of business confidence within Russia could be even more severe than during the initial invasion of Ukraine. To put this into perspective, the invasion in 2022 wiped out a staggering $44.5 billion from Russia's economic output. These warnings are not without merit. As rumours of a rebellion began spreading, Moscow's main stock market, IMOEX, experienced a nearly 2.5% drop in after-hours trading. This immediate reaction demonstrates the nervousness and uncertainty that has gripped investors and businesses alike. Of course, the mutiny's repercussions extend beyond domestic concerns. Moscow's negotiating position with its counterparts that continue active trade with Russia will inevitably weaken. This will allow these counterparts to dictate even less favourable terms for the sale of major export products, primarily hydrocarbons. Depending on the length and intensity of the conflict, logistics may suffer, affecting the transportation and delivery of goods. Moreover, in times of turmoil, opportunities arise for countries that are friendly or neutral towards Russia. They may seize the chance to acquire promising assets at discounted prices. As we continue our exploration of the economic implications of the attempted coup in Moscow, it's important to recognize that the impact extends far beyond Russia. In fact, it can have global ramifications. Russia holds a significant position as one of the world's leading grain exporters. The attempted coup originating from an important export hub like Rostov can disrupt grain supplies throughout the rest of the world. We've seen this before. When Russia invaded Ukraine in February of last year, global prices for commodities like wheat and corn skyrocketed. These prices more than doubled from pre-war levels, reaching their peak by May of 2022. But it's not just the disruption in grain exports that poses a threat. Political chaos in the region could also impact other commodities such as fertilizers, further distorting the delicate balance of supply and demand. And when that happens, prices soar for everyone. While global energy and food prices have since fallen from their multi-decades high, as we saw during the height of the Russia-Ukraine war, the battle to control prices is far from over. Now, with the attempted coup and its potential consequences, we enter a decisive phase where stability is crucial for preventing further economic turmoil. Although Russia has dropped out of the top 10 economies in the world, it still remains a crucial supplier of energy to global markets. Despite facing Western sanctions following its full-scale invasion of Ukraine, Russia has managed to maintain its position as one of the largest oil exporters worldwide. With a daily output of approximately 3.6 million barrels, it continues to be a significant supplier to energy-hungry nations like China and India. The potential disruption of Russian energy supplies due to the ongoing instability poses a significant risk. If Russia's energy exports were to be significantly affected, it would force China and India to compete with Western nations for energy supplies from other producers. This competition for energy resources could lead to increased prices and potential geopolitical tensions as nations strive to secure their energy needs in a more competitive marketplace. Such a scenario would have far-reaching consequences, impacting not only the involved nations but also the global energy landscape. There's also the question of how the global powers will react. What consequences will this mutiny have for global alliances, international security, and key players like China? At best, it may further weaken Russia and destabilize its homeland, neighboring regions, and areas where it holds influence. The attempted coup in Moscow holds far-reaching consequences that extend beyond economic implications. It will impact global alliances, international security, and key players in the energy, trade, and political arenas. The world watches with bated breath as events unfold, aware of the potential outcomes and the need for careful navigation. And there you have it. The attempted coup in Moscow not only poses significant economic implications, but also threatens the very future of the regime. It's upended the narrative of stability that has characterized Putin's tenure. While its immediate impact on Russia's economic stability might have been limited, the potential long-term consequences are significant. Of course, the implications of this instability are not confined to Russia alone. As we've discussed, the global consequences of such upheaval in a key nation like Russia can ripple across economies, impacting international security, energy markets, and global trade. As events unfold, it will be essential for us to closely monitor the evolving situation and its implications, both domestically and internationally. One thing is almost certain though: the future of Russia's regime, its relationship with global powers, and the broader geopolitical landscape are all at stake. Thank you for joining us today as we explored the potential impact of the attempted coup in Moscow. If you found this video informative, make sure to like, share, and subscribe to our channel for more engaging content.